A very good morning to everyone. Thank you all for joining in for today's webinar. Today's webinar is on topic Disbursements Demystified. We're going to be walking you through a little presentation on what are disbursements and how is it managed in a practice management. And my name is Gayatri and I'm from uLaw Practice Management Software. And this is technically a CPD webinar that is being hosted across different provinces for the ones who are looking for CPD hours. But this is also a very important topic, which forms part of basics. And probably Catherine and I felt maybe it's really helpful for you all to learn, other than just legal fee billing, what goes into making an invoice, and whether it's billable or whether it's any other components. We're going to be seeing all of those as part of today's webinar under Disbursements Demystified. Like every other webinar, this would also have an agenda. And as part of the agenda, we are going to see, of course, the basics of what are disbursements and how do we manage them, and what are different types of accounts that can be used, when a trust account can be used and when a general account should be used, and what are the different types of disbursements, kind of photocopies, travel, recovery of expenses, outsourced work, etc. So we're going to be seeing a few of these examples theoretically over here in the presentation, as well as I will walk you all through the uLaw demo as well. And last but not the least, what are the Law Society requirements when it comes to disbursements? How do you handle them, and what are their expectations are also seen here and covered here. As you all know, and probably you've taken a look at uLaw software, I'm assuming everyone in the class today has a uLaw account of your own. If you don't, please register, purchase online at your bookstore, and you can register for the account, and the account will be created by end of the day. So at least for the ones who've already played in with the program, you will definitely have an idea as to how to add a client, how to open a matter or a file. And when that is being done, how do we, what are the components that goes into invoice? Mostly will be for the legal fee or the legal work that was done. You will collect a fee on the work that was completed, and that is what is going to be seen as legal fee invoice. But the same invoice can also carry something called disbursements. What are these disbursements? So these disbursements are I don't want to complicate what are disbursements. Just to know, these disbursements are nothing but expenses incurred on behalf of your client. And you're going to be seeing how you would be recovering it from the client, whether you're going to be getting the money into the trust account, or the trust account already has money. You're going to be transferring it into the general account and making it yours. We're going to be seeing various parts of it. And just in crux, expenses incurred on behalf of the client and getting that reimbursed either into trust or general, respectively, recovering the expense is known as disbursements. So of course you need to maintain records of what you're spending. If you're spending anything from trust, general respectively, you need to keep track record of those, maintain proper books, and that would form part of the disbursements when you have to recover the expense. And how do you manage it? Like I already said, you've all been given a software, uLaw Practice Management. Now, for the ones who know how to record a legal fee, you'll also slowly learn how to record disbursements. But now, what are key points to remember when you're recording a disbursement? You are going to see definitely how was it paid. Basically, you're going to follow the money. Whether did I pay using my credit card, or did I pay using a business account or my personal account? How was it paid? And what is the reason of the expenses? So the basics of it is, first of all, to be understood clearly, and then you will be able to record it under the respective client and matter. Who did you incur it? Whether you incurred it for client A or client B, and if the client had two matters or multiple matters, what matter was it, incurred for? Whether matter 1, matter 2, matter 3, making sure that you always record the disbursement appropriately into the right client and matter is 101 rule first. You just have, that's the basics. You cannot add client name and matter into, a different one and bill them for that while you've incurred it for another client. So client A and B, basically don't mix it up. And that is the reason even though accounts tab or accounts section in uLaw does have facility to add client expense, we always recommend our clients to go from contacts or clients or matters and open up the file and add the disbursement under that. We're going to be seeing it that way, in fact, today. And so recording it under the right client, right matter, how it was paid, and what is the reason. There are 4 basic steps you have to remember. And it is very natural, honestly. When you follow the money, you know that there's $100 gone out of your general account. It could be for filing fee. You will immediately, when you're entering information real time, or when you're capturing information real time into the program, it's much simpler. You see that, okay, I have spent $100 trust payout, which has gone out of trust to a court filing fee for client X. Then immediately you go into uLaw, you open client X, you open the matter for client X, and you will be able to enter disbursement paid from trust for the $100 as court fee. We're going to see this, of course, as an example, but that's how you follow the money. When you follow the money, you know what is it, and then you replicate it into the program. Likewise, if it is paid from general, there are a few things as an additional steps that you might want to consider, definitely, because when you're doing a general disbursement, there's something called top portion, bottom portion, making sure which portion you're invoicing to the client and what is the portion, whether you're including a profit or not, and, pre-bill it, check everything appropriately, and then you can recover the expense. It's just probably 1 or 2 steps more when it comes to general account disbursements, because you're claiming as if you've spent for it from your general account, and you're going to move, of course, the money from trust to general or make the client pay into the general. So Law Society wants to know exactly what is it that you have spent for. What if you have spent for your office and you're putting it under the clients, right? You cannot do that when it's in the trust account, at least. You will have to be very due diligently working on it with the general account, making sure it's only your money, as in the client money is spent only for the client purposes. That's why it's disbursements. And anything that is, say that you bought paper for office, you're using for several clients, it's going to go under office expenses, of course. You will disperse it. I will show you how you can add it as a disbursement when you're using those papers for photocopying something for this specific client. Okay, so that's when you will use the general account. So there's a clear division between office expenses and disbursements, or other expenses and disbursements. Disbursements are purely client-related expenses that you are recovering, that you're incurring on behalf of the client, first of all, and later you recover it from the client. That is what is called recovery of expense. Now, how did you spend this money? How do you record this? How do you spend this money, and how do you record it? First of all, I said follow the money. Now, that's a very basic principle. When you follow the money, there is no way you can lose track of it. You go and log into your trust account, you see $100 gone out, You're going to record it as a code fee or a process server fee or any other transcript, probably somebody who's, doing a translator for you as a third-party expenses. So when paid from trust, you don't have to recover the expense because you are using client's money, which is already lying in your trust account, to incur the expense. And there's no concept of recovery when it is directly paid from trust. Point number one to note. Point number two, only items that are not profit oriented are made from trust account. You cannot include something from trust account with a profit motive in mind. Like, for example, you would have used your own photocopies and photocopy machine, created some photocopies. You cannot say you paid for that from trust. Of course, ultimately, you are going to move the money from trust to general for what is lying in your trust for this client. But while billing, you have to use general for the purpose of anything with profit motive. Okay, that is why there's a point here that says, why not pay straight from trust? So if you're paying straight from trust, remember it should not be with any profit motive. It should be with an actual bill. So that's why people mostly do for anything in terms of code fee or filing fee or, process server fee, as it's not your money. It's just shown as an expense from trust. There is no recovery. End of the day, it will just reduce your amount that is available in the trust account. As simple as that. Now, paying from general or business credit card or owner's pocket is absolutely different. You can play around with it. When I say play around with it, intentionally, you would want to charge slightly more amount on an admin work or a third-party consultancy. You have outsourced some work to a translator or, a notary or something. And you've incurred $100. However, you want to keep a profit margin on that $100 and charge your client $150. You can do this from paying disbursements from general, saying that, hey, top portion, this is where the top portion and bottom portion comes into picture, guys. Remember, so paying from general always carries two portions. Mostly, if it is not an actual amount you're paying, we want to keep the top portion and the bottom portion. Top portion is what you're charging the client, the $150, and bottom portion is what you have incurred, which is the $100 to pay the translator. So in general, if you're paying from general or business credit card or owner's pocket, which is your own pocket, like your personal credit card or debit card, record the expense with adequate information such as date, amount, method of payment. I love adding all these information, and I always recommend people, because uLaw can generate tons of these documents that Law Society is asking for, and we cannot go wrong if you have added all of this information. They're minute information or minute details, trust me, but Law Society looks into it when you generate the documents. They see hundreds of disbursement, and of which 90 of them don't carry the method of payment, cash or debit card or credit card. uLaw has already given you a field where you only have to drop down and select what is the method of payment. If you're not adding it, we won't be able to pull the information into the reports. So that is why I'm saying make sure to record date, amount, method of payment, appropriate matter and client, and how the disbursement was paid from either bank or personal account or credit card. So tracking down these disbursements by following money is the basic point. If paid out from trust, use the first option, trust. If paid out from general, bifurcate into general credit card, owner's pocket, and further bifurcation if it is actual amount or you're keeping a profit on it. And that's it. As simple as that. I mean, we're going to look into it in detail when we are doing few examples on uLaw, but the concept is just as simple as what we just discussed in the last few minutes. Now, I have incurred the expense. I have added it to the program. Now, what is the concept of recovering it? How do I recover the disbursement? Now, we are all going to add a legal fee. And how do you collect the legal fee? By raising an invoice. When an invoice can carry a legal fee component, an invoice can also carry a disbursement component. Now, if you have to include a disbursement, you have to make sure you're recording before you raise the invoice. You record the expenses. Don't raise an invoice and ask me, hey, you know what, Gayatri, I was trying to add a disbursement, but I cannot see it on the invoice. You've already raised an invoice for legal fee yesterday. You go and add it today. And what happens after that? You think that you've already raised an invoice, but it's not there. I added it. Why is it not showing it on the invoice? You've already raised an invoice with yesterday's date and you've added, disbursement with today's date. Please don't expect it to be there in the yesterday's date invoice. Make sure you raise a new invoice. And uLaw is about contiguous billing, so you will actually see that along with the pending legal fee from your client. So record the expense information with the appropriate date, record the amount, record all the, profit margin up or down with proper taxes. Then you raise an invoice. When you raise an invoice, obviously you get paid. There are two ways you can get paid, very similarly to how you're going to get paid for your legal fee. If there is money lying in trust, you're going to do a trust transfer for the amount of legal fee and disbursement, or sometimes people only raise an invoice for disbursement. There's no invoice for the legal fee. Maybe, they have not come to that stage yet, or they've already entered legal fee and done a separate go. Whatever can be the reason, but it is the same procedure. Once you raise an invoice, if there's money lying in trust, you move the money from trust to general. And if there's no money in trust, simple. You're going to ask the client to pay it into your general account. Now that you're done with the work, there's no obligation for you to bring the money into trust account. If it is paid by you from your personal money, you have another step. After you get paid into your general account, you can then pay yourself or a third party from the general account. Okay? But don't duplicate it into the trust. Don't pay out of trust as a disbursement and invoice, and again transfer the money from trust to general and pay the third party from general or yourself. That's going to be duplication, right? You're going to be it's double entry, and you're going to be duplicating the transactions. So if you are paying from trust, forget it. There is no trust transfer or client payment concept here. You're done. There's no recovery of expense. We saw it before 3 slides. Now, if you're paying from general, then you have to transfer money from trust to general, which is lying in trust, or you get the payment directly into general, and then you pay the third party or yourself if you have that to spend from your own pocket. Of course, if you've spent something from general account, you just leave the money there. It's just been replenished now. That's it. As simple as that. So make sure you have all of these recorded so that when we print the ledger or journal, it is going to be updated with all the information as per Law Society guidelines. I hope the last 20 minutes or 22 minutes has been okay for you all. Any questions? Just want to take a pause to check before I move on to types of disbursements. Okay, I'm assuming there are no questions so far. Okay, good. Let me go ahead and walk you all through the types of disbursements. Now that we saw what are disbursements, how are disbursements recovered, how are they, first of all, recorded, and so on and so forth. Now, what are the types of disbursements? Now, there can be disbursements for very simple example, like unit rate. Unit rate is mostly for photocopies and, printouts, etc. It can be for travel, which is where mileage comes into picture. They can be for billable for some third-party consultancy, etc. Or for your own, let's say, for court filing fee, etc. There could also be recovery of expenses on both actuals or any consultancy. But there are a few different types of disbursements. How are we going to record it? Now, what goes out of trust, what goes out of general? A very basic point to keep in mind is that any recovery of expense with a profit margin never goes into trust or never gets recorded under trust rather. It's always from the general account. Likewise, unit rate, that is photocopies, mileage, that is travel, all of these are again only from general and consultancy. So photocopies, travel, third-party consultancy with profit margin, of course, and then recovery of expense, which is court fee, etc. Whatever fee with profit margin also goes only from general. So if it is containing any profit margin or photocopies or mileage, etc., travel, only general. Billables, anything without profit margin, consultancy without profit margin, basically actuals, all go under both trust and general. There is nothing only for just trust. Okay? So anything without profit margin can go out of trust. I'll probably show you how it works when I'm walking you all through it. Let's say now you have recorded a few disbursements. We generate the ledger. What are these ledgers going to show your society or you for internal purposes or for your auditor, whatever? What are these going to, what needs to get into it and what takes it to maintain them? These are very tricky questions. When you're a student, I'm not sure how much this is tested, but trust me, when you're a paralegal or a lawyer, when you're a legal practitioner, basically, these are so damn important. These ledgers, these journals, these numbers. Well, that's why practice management's going to make your life seem slightly simpler. Just imagine you sitting and making these records like old school. There's never that you're going to do a legal work. You'll only end up doing accounting probably. But that's why probably over ages now things have evolved and we are here today with the practice management doing all the back-end work for you. But what goes into the system is in your hands completely. So making sure, if you look at these two ledgers here at the bottom, like client's trust ledger and general ledger, will clearly show for that particular client what has happened in their trust account and general account. For a specific date, for that particular event, whether the money has come in, gone out, what type of disbursement it is, whether it is a payout of trust or whether it is a transfer from trust to general, what is the balance? What is the running balance? And if it is general account, has HST been booked? Is there in HST? Has the expense been recovered? If you see on July 2nd on the right-hand side bottom, client's general ledger, on July the 2nd, there has been an invoice raised for $100 plus taxes, $113. And on July 22nd, subsequently, that invoice was paid for the $113. So that's how the client's general ledger shows you the expenses or the fee, what is being recorded here and if that is being recovered from the client. So each ledger has a running balance with the date, and based on the type of the transaction, it falls into trust or general respectively. And every transaction directly is recorded into disbursement ledgers or journals as well. So that way, when you also download a general disbursement journal or ledger, you'll be able to see the appropriate transactions that pass through the general account. As we were talking about disbursement journals, what does it take to maintain them, right? We could enter received from, we could enter amount. Sometimes I forget to enter method of payment. Does that make any good? I'll be like, see, it's not a big deal, but it could become a big deal when, you download the document and the appropriate fields are not filled in. It looks empty. You can be questioned. So why give room when you have the ease of adding method of payment in less than 1 second? So during audits, these disbursement journals are reviewed. So be very careful. Try to enter every tiny bit of information as possible. The right dates, method, payment, whether you used credit card, debit card, bank, cash, and the purpose of the payment and the amount. That's all. I mean, like, if it has HST, doesn't have HST, you're going to appropriately show it. So journals are more in detail than a ledger. If you look at it clearly here, a ledger has both receipts and disbursements, which means the money that come in and gone out into trust and general respectively. When you take a journal, it is drilling down respectively. If you take a receipt journal, it will only show you receipts into that account. That is the money that is the money that has come into that account. If you take a disbursement journal, it will show you the money that has gone out of that respective account, which is trust or general. So journals are record of a single type of activity, either receipts or disbursements, and for the respective bank accounts, which is trust or general. Now, that is what goes into the journals and ledgers. Let us take a quick look at fee book, and I think we'll be almost done with the theory part. Yeah, that's one of the last slides, guys, okay? Now, fee book, as we all know, that when you're capturing information, it goes into multiple ledgers and multiple reports are created after that. What is fee book? Fee book, of course, contains the legal fee and the disbursement that you have charged to a client, which is raised as an invoice, and that is converted or that is captured into this fee book, which records all invoice numbers with client which was billed and associated taxes that were collected for fee and disbursements. Following sample from the Law Society demonstrates this. So you can see that a date was entered, which is captured here. Nice. In uLaw, invoice number is auto-generated, so you don't even have to worry about it. So once you raise an invoice, it goes into the respective ledgers or journals. And since you're doing it under a respective client, the client information is also captured. What you have to keep in mind is capturing the right information on the right client, like the fee amount, legal fee amount, the disbursement amount, the HST amount, etc. Okay? Now, let's say you're going to be working on few of these disbursements. These are definitely managed well under, practice management software like uLaw. It's so easier that you can manage or track how these expenses are paid and how these are incurred, and whether you're charging a profit margin, whether there's a risk of paying for disbursements, whether you're collecting it back, recovering it back, and when you add it to your profit margin, is it being managed properly against taxes, etc. that's what probably I'm going to show you in the next few examples in the uLaw. Let's quickly jump into our uLaw platform. As you see, the screen says you can have a 30-day free trial. I mean, right now you guys have a EDU account, but in the future, when let's say you start a new firm, you can always register for a 30-day trial and see how it works. We'll be glad to have you back. I'm sure you have a better understanding as you're learning it here. So let's see how it pans out. All right, so I'm right now logged into my Playground account. So as you all know, dashboard is the landing page. You all get to create contacts here under Contacts tab. And you're also going to see under Matters where you add all the information for the client. So I created this matter this morning. I was working with the other class of your college. So let me just try to see if I can continue using this, or I can open a new matter for Liam, or we can even create a new contact. So that way there's no confusion. So let's say I add a new client. The client's name is okay, and now we're going to save in matter. When you click on save in matter, of course, I skipped the part of address and other details just to save a little time here. We're going to open a new file. Let's say this is again criminal law. See more of this happening in GTA these days. So scary. Okay, so this is your rate, your assistance rate if you're doing billable time per hour. Guys, forget these rates if you're not going to do a billable time per hour. Just make it 0. Or act as if you didn't even, don't bother that this amount is there. If you're doing flat rate, just come down, enter the event, say legal fee, and enter a flat rate, $1,000 for this file, and save it. Now, when you're doing a legal fee as flat rate, that's going under matter events. That's cool. Now you're going to go to Disbursements Retainer tab. That's where all the disbursement work happens, as the name suggests. And of course, retainer and client payments are also accepted here because we have both disbursement and retainer. Let's assume that the client gave a nice $1,000 retainer. You're going to enter that in a new retainer. They gave a check, so enter the check number. Received it from Nancy, and give them a receipt. You're going to check in this box and you'll be able to give a receipt. I think I clicked on cancel, guys. Sorry. Check. Okay, and apply. So now that I have the money into trust account, I have also charged some legal fee in here. I want to go and start using my disbursements portion. Under add new disbursements, there are a few types of disbursements that we have discussed. Just remember, try to remember what goes out of trust account, what can rather go out of trust account. Very straightforward. Anything that is not profit margin or profit oriented can go out of trust account. So let's say you have paid it out of your trust. And you're going to say that was $1,000 or it was $100. What was this for? It's a straightforward fee. It's a code fee. Okay, great. How did you pay for it? I used my check and paid to just say courthouse. Okay, and you can click on payments. This is an example of dispersing directly from the trust account because 1, you had money in trust. 2, it is not a profit-oriented disbursement. It is an actual disbursement. So I chose to just pay it from trust because less hassle, right? You don't have to worry about transferring money from trust to general, paying it from general or your own pocket. So it's very straightforward. That's why paid from trust has only one option on the top. If you observe on the top of the screen, right-hand side, where you see the projected balance, flat rate, disbursements, trust receipts. When I collected this trust receipt was $1,000. Currently, it is only $900. Why? Because I disbursed $100 from that $1,000 and became $900 right now. So right now I have $900 sitting in my trust account, but I already have more amount that the client owes me because I have also some legal fee billing here. Okay, disbursements are being made. Continue to make it. So now, when you look at withdraw from general, there are a few options. Now, withdraw from general also mostly are profit oriented, or it can be for the convenience of, I have my credit card, my business credit card, personal credit card, so I want to spend it first, then collect it from the client. It's not a big deal too. But again, it's an extra one step because you have to invoice, transfer the money from trust to general, then you move on. Okay? Now, let's say there are few types of disbursements from general account. First one, pay disbursements from general cash other accounts. Second one, pay disbursements from general, but actuals. Like how from trust account, you paid an actual amount. You can also pay disbursements from general with actual amounts. No one's stopping you. It's not always the profit margin, like I said. It's about the convenience also that you want to use your general account to pay. So let's say this time you paid a court fee or filing fee from the general account. Okay, so it was tax exempt. You're going to choose general account and pay to probably courthouse, check, or online payment, and enter the reference number and save it. Okay, so while that was done, let's assume the next one, you're going to do it with profit margin. Remember we spoke about mileage and units. How can you use that? Same actuals. So remember, if you're using actuals for, general account, you can use this option. Or you want to charge for mileages or units, also you can use this option. Or you can use the above option. Okay, there are two options here. Both are same. Miscellaneous expense also falls down to same. So this time I'm not doing billable like court fee. I'll go to mileage. I would say travel, client visit, or whatever. Let's say client meeting or client visit. And it was about 50 kilometers, 0.40 per kilometer. And your expensed amount was a little different amount. Say you want to charge your client for 50 times 0.40 or 50 times 0.10 just for ease of calculation. So you have $5 plus taxes, $5.65, but you want to just put it as $10 as an expense amount. Then this is going to be what you're discounting some charges to your client. If you're doing it as $2, then the $3 becomes a profit to you. So you can play around with a little bit, okay? If you're not incurred anything, you're just like that charging your client for the amount, then you can even do that way, okay? So let's say you want to save this, then it becomes $50 plus taxes, okay? So 50 kilometers into $1 per kilometer plus taxes, $50. I think it becomes $55.65 if I'm not wrong, right? So 5.65 plus 50, 55.65 if I'm not wrong. Now there are other disbursements that are like third-party consultancy we spoke about. Now this is, let's say there's a translator or there's a another third party who you have outsourced the work to. You're going to charge client for $200, but this translator charged you only $100. So this is the concept of top portion and bottom portion that we were talking about. The profit margin comes into picture when you're using this option. The top is what you're charging the client, and bottom is what you are getting charged. Okay? Okay. Now let's say that you want to use business credit card, reference number, paid to, maybe, let's say, okay, and you save it. Okay. You click on invoice. Now we have the disbursements entered here. We've seen paid from trust. We've seen paid disbursement from general cash other accounts, very similar to the third-party consultancy again. And we have paid disbursements from general actuals, mileages, miscellaneous expenses from general, paid third-party consultancy. We've seen. But what we had left out with, again, miscellaneous expense, pay from general cash other accounts, paid third-party consultancy, they're all going to look very similar, and that's the function very similar rather. So actuals, mileages are different. Whenever you're incurring an actual amount, you do use this tab. And prepayment to disbursement is something when you do not use a bank account. If you look at the bottom, it looks very different here. There's no bank option for me here. Like unlike the other ones where we had bank, accounts payable, and cash, there's no bank option here. You see, there's only deposits and prepaid, where, I mean, a few other options, but mainly people use deposits and prepaid in business, where they prepay for a specific account and they disperse from that topped up account. So like TerraView, LDD, mostly these are used by real estate lawyers. I've been come across other people using it otherwise, but prepayment to disbursement is when you have a prepaid account. It could also be for rent. For rent purpose, you prepay and you deposit, you move it from that. But in this case, I don't think you'll be using more. But to understand, there is a concept called prepayment to disbursement, where there's no bank in the picture. It is like you pay from bank to the deposit account. So it goes as a different one. And you take out from the deposit account, which is called prepayment to disbursement. Okay. All right. So let's now complete the invoice and take a look at how the reports are looking. So I'm going to invoice. The client owes me a huge sum, considerably. So you just have to move that from trust to general with whatever you have. And with whatever you already have in trust can be moved from trust to general, of course. But whatever you don't have, like in this case, client owes you more money, you can move from trust to general and get the remaining paid into general directly. As simple as that. So in this case, now we have legal fee entered in the first page. The second page has the disbursements. And the third page, the disbursements are completely general disbursements, if you can see. Now the third page is what is going to have the retainer and other trust payouts. Now other trust payout will have all the disbursements that is paid out of trust. Okay. And lastly, you have total billable, which is showing the amount due. When you go back to uLaw, of course, you're going to transfer what is sitting in your trust account in the real bank, make it yours so that you can pay yourself. Come back into uLaw, click on question mark, and transfer it. So you transfer it in the bank first, but make sure you're choosing the appropriate amount or transferring the appropriate amount. And once you transfer it, enter the reference number that the bank gives you and download the Form 9A, which is very important if you're practicing in Ontario. As Ontario says, every time you move money from trust to general, you need this form to be generated, that trust transfer acquisition form. I think we saw this at the Everything Practice Management session. Going back into the matter, we're left with getting the client payment into the account. So let's say the client paid you $712.50 through email transfer. Enter the reference number, enter the client's information. Of course, you're going to give them a receipt. Right now, I'm skipping that part because I want to showcase you that, okay, everything is in here. The disbursements are in here. It was invoiced. Everything was collected. All payments, nothing due. You're going to go to accounts and you're going to see how the various compliance documents that we spoke about, the ledgers, clients, trust ledger, general ledger, and the journals and the fee book, how are they going to look? So first of all, I want to show you the general disbursement journal, because this is going to show you the details as to, what are the disbursements that went out of general, and you spot various things that we added today, okay, like the translator cost, shiny, and then the courthouse fee. Both of this was done from general, right? And it has recorded nicely the date, the method of payment, whatever I recorded while I was adding the transaction, the amount, everything in here. Likewise, if you go into the client's trust ledger, I'm not going to do for all clients. It's a lot. So let me just do it for today. But today I had added 2 clients. So let me just do it for Nancy, right? So let's do Nancy. Was it Michael? One moment. NK, Nancy Kenneth. Okay. So let me download this report and you'll see whatever transactions happened in trust for this client. You see the amount that received into trust, that was disbursed from trust, whether it is a payout disbursement for the court fee $100 or the trust transfer that was done. Everything is here for you, right? All the minute details were captured here. And that was client's trust. And if you look at client's general, again, it'll show you all the payments that's coming. What I want to show you something here is fee book. So we saw general disbursement journal, like a journal for an example, and then a ledger for an example. I want to show you what is fee book. Now, fee book is also something that will show you everything in one document, especially both your legal fee and the disbursements. So Nancy Kenneth is our client. Of course, this morning I had another client. Just look at the client's name, Nancy Kenneth. I had $1,000 legal fee. That's in here. Okay, then what else did I have in my general disbursement journal? I had a $56.50. So I think I said 5.65. Sorry, it's $56.50 for the travel charges. And there's another one with court fee for 200 plus taxes. And there was another one for translator charges for 200 plus taxes. Or court fee was without taxes. That's the difference I wanted to show you. It captured without the taxes and it captured with the taxes. So you're able to see everything under the fee book very, very clearly. And end of the day, you know what is your tax owings because you have all the HST captured in here. If you go back, why don't you do a HST report just for today's date, okay? And you see all the disbursements and legal fee today that I had billed has come up. Okay, so this is what are the HST I have paid so far, okay, for the process server. For the ones that says NK are the Nancy Kenneth file. This is the other file I worked on. So for the translator, I charged $13 taxes. Another translator, another one that I charged taxes. Did I charge anything else with taxes? No. So only the ones with the taxes I have paid are for Nancy is this $13. But I received a huge sum with the taxes. For the disbursements, the photocopies, I had charged taxes, which is 6.50 here. And then the ones that says translator charges, all of these are taxes that I have received on. Because I said court fee for Nancy was without taxes, if you see here at the bottom, $200, just $200, the last but one entry. There's no taxes here. Taxes is 0. So that is not there in the HST report. You can nowhere see court filing fee here, right? So that's the level of data that we capture and give it to you as reports for law society compliances or for your audit purposes, etc. So if you were to download reports, generate reports, or look into your books the same way, you now know what is the level of data that you have to capture so as we could give you these reports, these meaningful reports, right, which could match with the actual books of yours. And that way you'll be able to arrive at the numbers, analytics, or even for your audit or compliances. All right. So these are few things I wanted to show all of you today in my webinar. I hope I've made a little difference. I understand it could be a little overwhelming. I'm going to share this recording and I'm going to share few YouTube links for your understanding. But I also recommend all of you to go into our YouTube platform and register, or rather subscribe for our YouTube, because our YouTube basically has quite a lot of information. And you can definitely make best use of the videos that are available in here. So the videos there are plenty of videos under playlist. We have over 500 videos that you can see, and mostly for all your questions, there will be an FAQ. Mostly there are a lot of FAQs that we've answered. So yeah, you could definitely go over it and see how it works. And if you all have any questions, you can definitely route it out through Catherine. Please copy her, email us. We'll be happy to assist you. But in this session, if you have any questions, I have 5 more minutes. I request all of you all to please let me know if you have any questions. Catherine, any questions from your class end? I know a lot of them are sitting in on the other end, so maybe you can let me know. If you're all using your Playground account, your EDU account, I request you all to access the tutorials under the EDU account. There's a help option. There are a lot of tutorials and guide over here for your references. Please make best use of the resources that is available to you. And beyond that, if you still need any assistance, you can refer to our YouTube channel. And you can also look at emailing Catherine and copying me or my team, and we'll be happy to assist you all through your learning process. Is there a way to calculate HST from trust account disbursement? Oh yeah. If I have, let me go back and show you this. So this $100 that trust payout disbursement that I did it without HST, I think, because I just calculated $100 and it got, because it's a payout of trust. So there's no option for you to enter with the taxes, I think. Let me show you that way. It's a wholesome amount, so you just add it that way as paid out of trust. But if you have generated the report here, you would see the HST report does not carry the $100 as it's for the trust. When you pay out of the trust, it's actuals. We calculate HST because you are raising an invoice, which is only for general purposes, right? When you are paying out of trust, you are not raising an invoice for paying out of trust, right? You're directly dispersing out of trust. But for general account, you have to include because if you're including taxes, you have to show it in the invoice. When you raise an invoice, it gets recorded as HST paid and received appropriately. But for trust account, it's a direct payout, so there's no way you're going to capture taxes there. Is that clear? Great. All right. If any questions, welcome. I'll be sharing the recording tomorrow, end of the day. Catherine, you can share it to all of them. And it was really nice showcasing our program and importance of disbursements to all of you. If any particular help is needed, kindly reach out to Catherine and let us know. And all of you, please go and follow us on our social media platforms. It will be really helpful as we keep posting like useful information. It will be really nice if you could look into it and benefit from that. So YouTube, our social media, Instagram, Twitter, and then, use our tutorial videos, etc. I mean, this would by itself give you a better understanding of the platform. All right. Thank you all very much. Let me wrap up with the recording here so we can keep it short.